back in April before the flash crash, right? Do you see that this is a
Right.
little different than
Yeah,
that
we
one there?
have the indicators like the VIX and the VXN at their all-time lows. The complacency is at their all-time lows.
Okay, so would it be fair to say that it's going to take some catalyst in those Dow transports and the financials to continue that bull move that everyone's excited about in the first 10 trading days of 2011? And if they don't get those reports out of the trade action, what would you be looking for up here at this top right here?
What I will be looking for is if they do not come in line and they miss, especially on the Dows, what we're going to be looking for is a failure at half bar and seeing if that breaks, to seeing where it hits the double top there, it can't break through it, and it fails and breaks lower on a red bar down.
Okay, and if that happens, what we would be looking for is that what you've been taught here is that the public would say, oh, it's just a little pullback like it was over here, but you would be looking for a big, fat, long red bar, and it would never bounce back for them when that time comes.
Absolutely.
Because all the way up, every time they've gotten a little pullback, you've bounced. But there'll be a point in time where that true reversal starts, and whatever day that may be, as you're taught here as a market maker, whenever that day comes, we are prepared, but we are on high alert for it. Is that correct?
That is absolutely correct. And going into earnings, we are even more on alert.
Okay, so sometimes people need to understand that the bear ETF should be watched in case the Dow ever does come down, because the bull ETF related to the Dow is extremely overbought, just like the TQQ bull is overbought. So as we start this great earnings season and the options expiration, is that companies that don't come in good are going to get punished, just like Coinstar did in after hours, down $17. They guided the quarter down, and I can guarantee you we're going into the earnings season, and I did not hear about a lot of warnings. So it's probably telling me that 75% of the earnings are going to come into the upside in this particular first quarter, and that would keep the move elevated for a period of time, but then the bull would want to buy every pullback and get in at lower pricing level because he's yet to perform, and it's the beginning factor of 2011. And basically these bears and these bull trends have their time cycles and tug of wars that they go through. So with using your high counts, as you are making the high counts, if the volume is diminishing, then that will mean that most of the people are getting in at the top of the Dow. And we want to be very mindful that there is, as long as we're the referee, because that's what a market maker does, makes a market between the public. That's what the market maker school is. There's no other one on the internet. But however, every MMT must learn the pro, the con, and the wisdom that I have carried in at least good 20 years of good earnings. The thing about it is that there's a mechanical process to earning season. And when you're too top heavy on the equity side and they come in with a good report, but it's only so in line, we'll be looking at how to short those gaps in the earnings season. Now, for the ones that miss that are high beta quality stocks that drop $15 or $20, is how to walk the dog. The SMF makes a market wherever a market's going to be made. Doesn't matter if the market is made down here. Just know, though, that if we do break higher on the Dow and we hold half of this weekly bar, this bar is 11,746 on the Dow. This bar here, which was on 1/12/2011, is 1127, and the underlining half bar, bam, you get support, kind of like we did with closing above the half bar in that trend, and that's what kept that in there. That's why we kept saying we had a lot more room to go higher. Now, when we look in the back end of the brain, we can tell where that Dow is. A half delta up So we're going to be watching that Dow for some very key levels. Let's say that the Dow comes up to, um, let's just call that move another half delta higher, and it fails, we would look at moving in short if that was to be the case. Okay? And that the public will be the deciding factor at every market top and every pullback. With the amount of exuberance, we look for the Dow to break higher on new developments throughout the earnings. It's going to take a catalyst of, it's going to take a complete catalyst of certain sectors that have underperformed in 2010 to roll out the January 2011 earnings to the upside. And in order to keep going up toward the 12,000 handle on the Dow, is that you're going to have to pull it from those headlines there. Then that would mean that the broader markets, that stocks will hit certain levels in your market maker pricing zones, and you would be buying net long off the bottom. Now, on the other hand, if they disappoint and the Dow reverses and coming down, then when stocks that are related to the Dow would sell off at their upper end of the market, and they too would roll right over with the indexes. So there are some key elements that we're going to be going through as far as the headline events go. And the headline events are going to be those earnings, those guidances. There's other things that are going to be coming out, that all the bulls, you've only had 10 trading days in this Dow. And the first 10, there's 20 trading days in the month. So we're going to start a new period of 1 day through the next 10-day period, and we're going to start dissecting the first monthly Dow Jones interpretation. And I will do my yearly Dow index formula. It will not change for the whole year. It will remain the same. The Dow will trade within those markets, going to the upside and going to the downside and going to the upside. And basically it will have the full year mapped out and the ranges for the Dow, and how you new MMTs that are just entering the market making school will make your transactions through the public and walk away with the money.